Welcome to Wall Street Academy. This is Big FX. Well, today we'll be talking about candlestick formation. That's candlestick analysis. On today's video, we are meant to understand how this candle forms. This will help you to know when market is going up or when market is about to go down. But first, I want you guys to understand when it comes to this candlestick. Like you can see on the screen, candlestick simply means like a graphical representation of what is happening in the world market. You guys know that you can change this candlestick to a line chart when you use this button here, right? You can as well still come here, you select any of these as what you use for analysis. You see the way this one is looking, you can still come here, see how this one is looking, do you understand? So mostly we always use what? We always use candlestick. So with the help of candlestick, it gives us kind of what is happening in the market, in the forex market. So like I was saying, if you take a look on the chart, you will see that it used to have an open price, close price, right? Just like the way it is. So they have an open, have a close price, open price, right? The high and the low, right? So let me show you guys something. When it comes to candlestick formation, first thing I want you to do is this: go down to 1 minute time frame, open the chart and look at what is happening, and look at how it used to form. You check on how this used to form. You see that whenever this is the current price, right? Whenever this current price tap to, whenever it reverses, it will leave a wick. It will show us a wick. I don't know if you notice, if you have been following how this used to work. If this push down to this level, right? If it still go back again, it will print a wick there, telling us that that was when price did what got that same level, right? So that's what I'm trying to tell you guys. If you take a look at what's happening here, now price has gone to this level, but you see that if price drop, you will see a wick, right? It will once price drop downside, it will see a wick. Can you see that wick? Can you see the wick? So that's what I want to let you guys know. You see the wick here, right? So now, the way it is here, now let me show you guys something. Let's go to first thing we have to talk about here now. Since you guys have seen how this week used to come about, and with this week, that's what that will help you um to know the formation of candles. Now, another thing I want you guys to know about candlestick formation is this. Remember, you should always have it in mind that Forex is all about fight, or Forex is all about fight between buyers and what? Between buyers and sellers, right? So whenever you spot something like this, if you zoom out this, you see that we have a black candle here and as well have a blue candle here. So meaning that whenever markets start pushing downside, you see black, right? Whenever markets start pushing upside, that's when you see blue candles, right? Now look at this point again. Now, see from this part down, when market tried to go down, we are seeing what a black candle, right? And from here, market which was going up, we are seeing a blue candle. And remember, if you're able to follow our PDF, if you're talking about a bull candle, that means you're talking about a buy candle. And if you're talking about a bear candle, that means you're talking about what? A sell candle, right? Now, let me show you guys something for you guys to understand now. Let's say that we go to our PDF. Now, what we have here, you see that the first candle to analyze here happens to be something like this, right? Happens to be a candle that got to this level, drop again, maybe give us something small like this, right? Now, Now, yeah, if you're asked to tell the story behind this or the psychology behind this candle, this simply means that there was when price got down to this level. There was when price got down to this level, and the buyers pushed it up. The buyers took control and even got up to this level again, and still sellers did was still brought it down. So when sellers brought it down, it happens that the candle closes within this zone and maybe another time frame. Because remember, if you're talking about time frame, that means you're talking about if you're talking about time frame, just like this is 1 minute, right? Simply mean that in every minute, a new candle forms. In every minute, a new candle forms, right? So once we're able to spot that candle look this way, once we're able to spot that candle look, so the way it is here, you see that the measurement from here and here are the same. And from here ahead are the same. That means it simply means that was when price go down to this level and the buyers took over and push it up and even got here and still drop it back here. Meaning that we have 50-50 strength here, right? So they have 50-50 strength here. That means we have what indecision candle just because we don't know if market will push up or if market will do what push down. So that's what we call as what doji. And if you check again on there, once we're able to spot this, the hammer candle is meant to see we are in the downtrend. And the way it's looking, right? You see how this is a downtrend, right? We're able to spot this at the downtrend. So meaning that there was when market got to this level and the buyers did what took over and push it up. When buyers push it up, now market closes around this part. Now after that, what happened? We enter another time frame and we are able to spot another green candle. So we had to go in for buy somewhere here and stop loss will be where? Under here. Do you understand? So stop loss will be under here, buy somewhere here, right? Maybe to continue the trend and continue to buy from this market. So you see, that's why we're able to use candlestick. We need to understand how it works first. We need to understand how it works. Now, another thing now is this inverted hammer happens to be what? Inverted hammer happens to be like opposite of what? Opposite of hammer. That means if we're able to spot something like this in a higher time, sorry, in an uptrend, let's say something like the market keep heading to a certain zone. Next thing we're able to spot something like this. Um, we're able to spot something like this in an uptrend. It's not the market got to a certain level, buyers took it up, and sellers now dominated, and they were about to do what to take the market down, right? So it's just like opposite of what? Opposite of hammer. So you need to watch and read up. Now, another thing now I want you guys to know now is this. Let's go to the chart. But a hammer candle, which I've talked about too. Like I said, you can spot all these hammers in anywhere, but where we always take it so serious with where, be it in downtrend or what, uptrend. Now, we've talked about a hammer candle. Sorry, I talked about doji. We are talking about hammer, and I said inverted hammer happens to what the opposite of hammer, right? Now, we're talking about bullish engulfing. Let's clean the W. Bullish engulfing. So this bullish engulfing, let's I think let's look at the screen or PDF. Let me show you guys something. All right, this is all right, this is bullish engulfing candle. You see, what I want you guys to understand here is this. Having this as a downtrend market, remember you're meant to know this, you're meant to be looking at this in a downtrend or uptrend. But since this one is bearish engulfing, notice that this after the last candle here happens to be smaller, and after doing the time of reversal, we're able to spot what? We're able to spot a candle that engulfed this, that is much more that overcomes this. You understand? So with this, that means there was sellers. If you had to give a support behind it, there was some sellers who was kind of a bit somewhere here, but buyers took over. When buyers took over, they were able to do what? Dominate and even surpasses this small red candle here. So this is for what? The bullish engulfing. Now for bearish engulfing, it happens to be we are at the uptrend. And if you take a zoom again, you see that this happens to be our uptrend, and the red candle are able to do what? Supersede our dominate this, right? So this is what a bearish engulfing. I don't really need to say much here because you know that an engulfing or for something to be engulfed means that for something to like kind of to overcome or to shadow, right? So that's why you look for this. And these are things that in an uptrend you look out for it to help you to do what? To go in for what? Sell, right? Now, another thing I want you guys to know now is this Twitter pattern. We have Twitter bottom and Twitter top. Just when it comes to Twitter bottom, it's just like a double hammer in a downtrend, right? So this is a downtrend. It's not like a Twitter bottom. This is a downtrend. We're able to support this hammer here. Why? One, and we're able to support this hammer two. So it means that when price got this level, buyers took over and took it up. Sellers even drop it again. Buyers did what took over, right? So after that, once you're able to go in for buyers somewhere here, our stop loss will be under here. Do you understand? Now that's for what a tweezer bottom. A tweezer top happens to be what the opposite. If tweezer top is happens to be at the uptrend down, this one will be what? A downtrend. You understand? And you see that it looks like what? It looks like a hammer, a double hammer after this hammer and that one to be sure before you what? Before you go in for buy on that market. You understand? See, you can call this what inverted hammer. You can call this inverted hammer. You see, after this inverted hammer, we're able to spot it. We're able to spot it at where an uptrend. After that, what happened? Markets were able to do or to drop. That means there was when buyers took market to this level and sellers did what to drop it, brought it down to leave us this thing that looks like what? Like a hand in hammer. Right? After that, what happened? When price got here, sellers did what? Took down and the later start pushing the market downside. Do you understand? Um, take a look here. This is what happens to be what a hammer candle, right? So it's not more that you must get that hammer candle editable. With this hammer candle, right? Telling you that when price got to this level, buyers did what took it over and left what print of weeks here. After that, what market now continue to go up. So you can see this in any time frame. And as well, you can see this in any pair you are trying to also so trying to analyze too. We have a lot of samples. So you see, this look like what? It's user what? It's user top bit. You see? It's user top. With the help of this week here, showing that there was when price got to this level, sellers did put it down from here again, sellers still put it down. So there was still weak here. After that, what happened? After spotting a teaser top and an uptrend, you see the next thing happening is what? The market to fall, right? To fall. Now that's what I will still drop I will still drop a PDF or app that will download concerning this candlestick formation to help you guys so much. It's very important and so interesting once you understand how this candlestick works, right? This how this candlestick works. So I think I will kind of end it here for now. Thank you so much, you guys, both for persons that are in outside Nigeria and those that are in the country. So thank you so much, and um, expect more videos from me. You're welcome.